Hello, I'm Craig Birch here at Manders Real Estate headquarters on the Compton Road in the heart of Wolverhampton. Not with top tips, but a deviation from that on this particular week. 5 ways to stay ahead of a rise in interest rates. The Bank of England this week certainly made all of the noises that they will be raising interest rates for the first time since August 2006. So that's 11 years since they've done this before. It may not sound like much, 0.25% to 0.5%, but a lot of people worry this is just the beginning and interest rates will rise and rise and rise, but probably not against the same rise in inflation, in wages and so on. But let's just think, just to go over some of the things we said in this week's property bulletin, you can expect it to cost you £16.56 a month when this is introduced, and £198 a year on average. The Bank of England are expecting to recoup £1 billion on the back of this, an extra £1 billion between now and the start of 2019. So they're obviously very confident that the economy will stand up to it. But what can you, little man in the street, little woman in the street, do to combat this sudden rise in inflation? We can't fight the world on our own, but with these tips, let's certainly have a go. Let's go from 1 to 5 now. Number 1, check what type of mortgage you actually have. A lot. If it's over 5 years, or you can't remember what it is, there's every chance it's a standard variable rate mortgage. That's what most people have. And if you'd gone over to the alternative, which is a fixed rate mortgage, then I'm sure you would have remembered asking for that when you got a mortgage. Fixed rate terms can be anywhere from 2 to 4 to 10 years. They normally are at a lot higher interest rate than a standard variable rate, but they do stay the same over that course of time, whereas a standard variable rate can change at the lender's behest, so it's whatever they want to charge as interest, which is not a great position to be in. So do shop around and see what the best rates are for that. You never know, you might get a bargain. Bargains do still exist, believe it or not. Number 2, keep your eyes out for what the market is doing. Obviously, with the Bank of England's interest rate rise, the lenders will pass on the increase onto their borrowers, but bear in mind as well, there's still a few lenders on the market, haven't there? And they've hit us in the pockets, so now the onus will be on them, or the onus will be on their customers for them, and new customers coming into the market to look around and make them compete against each other. They will have to find a way to offer good deals now and outdo their opponents, otherwise you're simply just going to pick the best price. And if we can get them into some sort of war with themselves, then it's certainly not going to do the customer any danger at all, is it? Number 3, don't become a mortgage prisoner. Of course, you take out a mortgage, even if you have a fixed rate mortgage, after a certain standard of time, you will be switched automatically to a standard variable rate mortgage when your fixed rate's ended, and that's ditto if you get a discounted deal. There is a way around this. You can remortgage your home and then go with another provider, but there's all sorts of reasons why another provider probably wouldn't touch it. Not having enough equity tied up in a home, or even if you can't keep up your mortgage repayments, they're the sorts of things that can, goodness knows, go against you if you want to remortgage and so on. And remortgaging is always an option you would like to have anyway, so just make sure there's enough equity tied up in your home. Make sure you can get enough equity over the time of your fixed rate terms perhaps, and maybe then you'll be in a driving seat if you want to consider that option. Number 4, keep cash stashed away for a rainy day. Oh, goodness knows how we'd all like to do it. It never quite seems to pan out like that, but this is a real turn in mortgage borrowing now. Who knows where it will end? So if you can have some money stashed away, if you don't use all the money of your mortgage and so on, do put it away for a rainy day, and then you'll be ahead of the game if changes for the worse do occur. Number 5, speak to a broker or a mortgage advisor. New lenders coming into the market are advised that the market is changing all of the time now. Financial advisor can help people who already have a mortgage and would like to consider their options. Maybe they've had a mortgage for a fixed rate term of 10 years and now looking onto to something else and would like to sort of see what's there available for them. Do come and see us here at Manders as well. We work with an approved mortgage advisor from the Financial Conduct Authority who will be able to help you with that. And certainly it doesn't cost the earth, but it's better to have some sound advice than to get stung down the line, because being stung down the line in this market can be very costly indeed. I'm Craig Birch, and we'll see you next time when we have top tips.